How do you ensure your success fix and flipping in various market conditions? Well, over the past 5 years, we've completed over 250 fix and flips at this point, and we've only lost on 4 fix and flips. Now, the very first fix and flip that we did, we lost $50,000. Well, we learned a lot from that scenario, and that ultimately helped us build a foundation to ensure our success going forward. But the bottom line for fix and flipping is that you need to buy a property at a significant deal. Now, what is a significant deal? Well, in fix and flipping, you need to understand, I would say, 3 very important criteria. Step 1 is understanding how to properly calculate the rehab value. If you underestimate your rehab value, let's say you're buying a property for $400,000 and you estimate that you're going to spend $75,000 in the rehab. If you don't do your due diligence up front and get contractor bids to verify that that bid is truly going to be $75,000, then you can blow your budget and ultimately blow your back end on the fix and flip. That can get you into a lot of trouble and very quickly. So, especially when you're starting off in fix and flipping, we recommend that you don't just take people's word, such as wholesalers or real estate agents, for how much that renovation is going to cost. You need to validate that with actual contractor bids and have at least 2 to 3 contractors on hand that you trust. Walk the property with them and get bids in hand so that you're validating your rehab numbers and that your model then can check out. Step 2 to ensuring that you're buying a good deal is understanding what the ARV is. The ARV is the after repair value. So again, if I'm buying this property for $400,000, I'm estimating I'm going to spend $75,000, then I think that I can sell it for $600,000. Well, $600,000 is my ARV. Again, what I think I can sell it for once that rehab is completed. In order to determine the after repair value, you need to look at comparable properties in the neighborhood. And this can be very difficult to do. So if you aren't an experienced real estate agent, you definitely want to have at least 1 to 3 experienced real estate agents on your side to ensure that they can validate that after repair value for you. Now, 2 things to consider with after repair value is the objective factors and then the subjective factors. So when we're calculating comps, we always look at objective factors such as square footage of the property, bedroom and bathroom count, finished basement, the yard size, things that again are objective, and then we're comparing that to comps that are very similar. Now, the other main thing when comparing after repair value is the subjective factors. So what's going to make your house stand out relative to the comps, or conversely, what is going to make your house sell for less than the comps, such as things like having an open floor plan, having a great layout where, let's say, the master bedroom is separate from the other bedrooms, which is a big selling point. Let's say that your yard backs to open space, or as a negative factor, your property backs to a major road or power lines. So you really have to consider both the objective and subjective factors of that property and what's going to make that property sell for that amount. The third factor to consider is how long you anticipate holding this property. Now, most people when they're doing fix and flips get a hard money loan. This can be very expensive because it's a short-term loan, and usually you're paying 2% on the loan value, and then you're paying ongoing interest of, let's say, 10%, which is ultimately very high. So determining how long you are going to hold that property will definitely determine what your back-end profits are going to be. 2 things to consider on that subject is, number 1, how long that rehab is going to take you, and you want to be conservative with this. So again, having a contractor not only give you a bid, but also give you a time estimate of how long that's going to be, and then add on at least 30 days to that just for contingency. The next is how long is it going to take you to sell that property? Now, of course, in a great market, you're listing the property and it's going under contract right away. But one thing you have to look at when you're looking at the comps is what is the average days on market in that neighborhood, because that's going to signify ultimately how long you think your property is going to sit on the market. If the average days on market in that neighborhood is, let's say, 30 to 60 days, well, then you're going to want to estimate that your property might sit on the market for 30 to 60 days as well, and that is going to contribute to the total amount of time that you're holding the property. So, in summary, understanding how to properly calculate the rehab value, how to properly calculate the after repair value, and then how to properly calculate your holding time. And you want to be very conservative with all three criteria. So, for instance, if my rehab budget is $75,000, I always want to add at least a 10% contingency. If I think that my ARV is $600,000 based on the comps in the neighborhood, I might want to discount that 3 to 5% just to be conservative. And then if I think my holding time is going to be 6 months, I might want to add on another 2 months to that, again, just to be conservative. So if you really want to be successful in fix and flipping, you have to understand those three factors, and you also have to approach every fix and flip that you get with a conservative analysis.